All hello, welcome friends. In this video, I am going to discuss some interview based questions. So, what are their questions? So, if you interested or you are entering into any bank investment banking roles, so they may ask for meaning, purpose, and some examples they may ask. So, firstly, commonly question will be tell me about yourself and what is hedge fund, what is private equity, what is bank reconstruction, what is arbitrage, what is capital trade life cycle means what, and fixed income, what are corporate actions, and some tell some about corporate actions they may ask in different type of questions, and I will focus on some now 10 questions or some 20 to 25 questions I will focus on here. So first question, what is there, what is role, what is your yourself, tell me about yourself means you need to tell about yourself. So what is your name, and you to mention about the investment banker. So as I am a aspiring investment banker, so I want to bring strong foundations like finance, analytical skills, and commitment to achieving financial goals. And with the background, you need to mention your any relevant educations or experience you have done in the past. And if I am you need to express I am equipped to navigate a complex financial transactions and contribute effectively to your team. So you need to mention about yourself means you need to tell that I am aspiring for investment banker, I was have a strong foundation in finance and analytical skills and commitment to achieve financial goals. So you need to mention your educational qualifications along, like if you are doing in a MBA finance, or if your background is a CA chartered accountant course, or any educational relevant educational qualification you should be mentioned. That is first question. So tell me about yourself means you need to tell about yourself, and you need to focus on investment banker side. And second question, what is the second question, what is hedge funds? Hedge fund means what? So hedge fund is an investment fund that pool capital from accredited individuals or institutional investors. And here accredited investors individuals means what, or institutional investors means what? So hedge funds always pull from capital from accredited individuals. Accredited individuals means who are wealthy individuals. Who are wealthy individuals means HNI, that is high net worth individual people who have more money and who are the potential persons to invest more. These are persons are known as accredited individuals. So hedge fund focus on these accredited individuals who pull money from there and are institutional investors, and they for that they will employ various strategies to generate returns. And these strategies may include, what are the strategies may include, they include long position or leverage derivatives and more. So the goal is maximize the return which manage risk. So it will manage the risk and maximize its return. That is the main goal for hedge funds. For example, hedge fund might use a long short strategy to profit from both rising and falling markets. So there may be bullish market or there may be bearish market. So in the both market, here hedge funds will try to get the profit. It is the main function, it is the main intention, it is the main strategies it will use for to get the maximized return in any situation. That is the hedge fund specialty. Next, what is private equity? What is mean by private equity? Means private equity involves investing in private companies or taking public companies private with the aim of generating significant returns. So here what we take here, investing in private companies or investing public companies might come into private companies. That is like insurance, that is LIC company is going into IPO, that is going for public, and some cases public companies will go for private equity. That is the case. So private equity firms raise capital from investors to acquire or invest in businesses, so often aiming to improve operational efficiency and increase the company's value. Here what will happen in private equity, here the private companies are taking public companies private with aim of generating significant return. In hedge funds what we see in maximize return with managing the risk. In private equity significant return is the aim to provide, and where private equity firms raise capital from investor to acquire or invest business. Why the capital will rise here? Because to acquire or invest in business, or often aiming is you are improve the operating efficiency, and in the company's value will be increasing. This is the main aim. So if you go for example, private equity firms acquiring struggling companies or implementing strategic changes and eventually selling it for profit. So what they do, they will take over the companies who are in a down, and they make operationally good, and they will sell. This is the private equity main concept. And whereas fourth question, what we told that fourth question, what is bank reconciliation? Bank reconciliation means it is a process of comparing a company's bank statement with its own accounting records to ensure that all the two are in balance. So if you have maintaining one company must maintain books of accounts as per section 128 of Companies Act, and you should maintain the books of accounts. So in that, from that books of accounts and with the bank statement which provided by the banks, so you are comparing this bank statement and your books of accounts. This is the process, means comparing the company's bank statement and your own accounting records. So why you are comparing? To ensure two balances are same. This is bank reconciliation, for example, and it helps identifying is there any descriptions or outstanding checks or deposits, ensuring the account financial reporting. For example, reconciliation monthly bank statement ensure that all financial transactions are accordingly recorded. For example, if you go for and 31st March or 30 March, there are some checks was given. So the checks will be entered in company's books of accounts and sent to bank, and bank will, if the check is same bank related, it will release in same day. If the check is related to other bank, then the amount will be realized after 3 days or after 4 days. So they may take some time. So in bank statement it will appear after financial year ending, that is 31st March 20 year. And if you entering the books when the check is returned, that is before 30 March, so in that cases you need a reconciliation, so to ensure the financials and identify the any discrepancies, outstanding checks, deposits, etc. So what is meant by bank reconciliation? It is a process of comparing the books of accounts and bank statement to ensure two balances are records accounting correctly and identify any discrepancies. Next, what is arbitrage? Arbitrage means that is a practice of exploiting price difference in the same asset in different market or different form. So it is doing one practice. It's same asset will sell in different market in different prices. So one mobile, for example, if you are using the one mobile and you are buying in one market in Hyderabad, you are selling at Chennai. So if you are buying at 20,000 and you are selling at 25,000, so you will get the profit. That is the arbitrage. So practicing, you should practice this exploiting price differences, that is same asset in different markets or different firms. Here main aim is to make profit from discrepancies. So for doing this practice you should get the profit. For example, a trader might buy on stock one exchange where price is low, so he will buy the stock at lower price where the market is there, and simultaneously sell it another exchange where price is higher, though there may be profiting from price difference. So by buying lower and selling at higher, he will get the difference amount as a profit. Is the arbitrator. That is arbitrage means. What is capital? Capital means, so here capital means it is refer as financial asset or financial value of assets such as cash or goods used by the company to generate income. So capital means when the company is establishing, or if you are entering into sole proprietor, even if you take the example sole proprietor, you need some cash. So you need to take some cash, and from that cash you need purchase the goods, and then you sell the goods and you will get the profit and you will get the income, and after that you meet some expenditure, you will get the net profit or income. That is here though the capital will be financial assets or financial value of the assets such as cash or goods. This capital will be used to company to generate income. It can be classified into debt and equity. So capital may be debt, capital may be equity. And for example, company might raise capital by issuing stocks. So if you go for equity, it will issue the shares. If you go for a debt, means taking the loan or to fund to its operation or expansion, etc. Next, what is the trade life? I think trade life cycle means what? Trade life cycle means in investment banking. What is trade life cycle in investment banking means encompasses the various stages of executing a trade for initiation to settlement. So here there may be different stages or different stages for executing the trade. So one trade will be executed in different stages. So one person may be invoicing, one person will be delivering, one person may be shipping, one person will be take the prices, and one person will be issue the invoices. So they may be executing different stages for initiation to settlement. So from starting where the goods will be taken from the godown and it will deliver to the customer and taking the money, that is the settlement case. So from starting to ending, and here initiation to settlement, it may include from order generation, trade execution, confirmation, clearing, settlement, etc. Each stage involves different department and processes. So within the investment banking, so here we must ensure that compliance and efficiency throughout the trade process will be accurately working. And last one, the eighth one, the fixed income. What is mean by fixed income? Fixed income refers to investment security that pay a fixed interest or dividend over a time. So fixed income means you have some securities, you are invested in some securities, that securities will pay fixed interest or dividend income, or over a period of time you will get that fixed income or dividend income. That income is known as fixed income. For example, bonds and certificate of deposits. Investors receive regular interest payment and return of principal at maturity. So if you go for bonds or if you go for deposit certificate, so investor will get the regular interest and he will get the principal at the end of the maturity period. And for instance, the company might issue bonds to raise the funds and investors receive fixed income. For example, we told that in last case, so there may be capital will be equity or dividends. Capital may be equity or debt. So if you company issuing the debt and company need to pay the interest regularly, and at the end it will pay the principal amount. So here the person who is the investor is there now, that investor will get the fixed income, that is interest income will be the fixed income. That next, what is mean by corporate action? So corporate action means it is one event. Firstly, it is one event. This event was initiated by the company. So that event will be initiated by the company and that can impact its stocks or securities. So whatever the actions, that is event was taken by the company and it will impact its stocks or it will impact its securities, that is corporate actions. So for example, there may be stock split, there may be dividends, there may be mergers, or there may be acquisition. The different corporate actions will be existed, and these actions can affect the stock price by influencing supply and demand. So for example, if you take the example, if a company announces a dividend, or it may attract more investors, potentially leading to an increase in its stock price. So if company is announce a dividend, so some person may assume that company is issuing dividend means it is a good company, so we need to invest. So they may attract more investors and potentially leading to increase the stock price. This is the case. So I have explained now all 8 questions with examples. For more, you need to subscribe the channel.